All right. Listen, let me ask you a question. Have you ever taken a trade and 5 minutes later it goes the exact opposite direction? Almost like the market knew where your stop was. Yeah, we've all been there. You buy, it drops. You sell, it rips. And you start thinking to yourself, this kind of feels rigged a little bit. Here's the truth though, it's not rigged. You're just standing on the opposite side. You're standing where the rookies are. And the market makers, they love rookies. They love hunting you guys. But today, I'm going to show you how to stop being the one getting trapped and start being the one trading and reading the institutional footprints. Where is the money? Because this week, the banks showed their hand. And once you see what they're doing, the charts start making a whole lot more sense. You're going to find consistency there. Right? Are you guys with me? All right, what's going on? It's Coach UV, and welcome back to the Unique Trading Group. Here is where strategy meets mindset and discipline turns into income. Truly. And around here, we do not gamble. We don't chase candles. We do not predict. We build plans, all right? It's all about market structure here. I'm going to teach you guys how to read price action with a trading plan. So get familiar with the channel and welcome here, because trading is not about being right or wrong. It's about managing risk, aligning with our probability. So we want to get into position, and that's the whole game plan, all right? So before we even talk about the COT report, I know you guys are here for that. You want to see what's going on with the report. We're going to get straight to the charts because price always speaks first. Always. The truth is in the chart. So everything else is really just confirmation. So let's go ahead and hop over to the SPY. Okay. Now, as you guys can see in front of me, we've had a lot of wild swings here on the SPY. If you're not familiar with the SPY, if it's your first time watching, it's the Standard & Poor's ETF. All right, it has the top 500 companies in the United States, and this ETF stands for Exchange Traded Fund. It represents those 500 companies, and you can get exposure. All right, you could buy shares, fractional shares, or you could trade the option. But today I'm going to be talking about the price pattern, what you guys can do to trade it, getting prepared for next week and the rest of the month, right? Because the banks are buying, and if you're trading SPY and you're watching this, you're going to want to know what's going on. All right, so let's look at the way price moves. It doesn't really move straight up and down, as you guys can see. Back and forth, right? It swings like a pendulum, all right? Range to range, okay? Range to range, high to low, low to high. And why is that? Because the market isn't an auction. It's really just buyers and sellers, guys. It's really about negotiating price, an imbalance and a balance. That's what's happening. That's where the traps happen. And that's where rookie money gets chopped in, because beginners, they really chase the middle. They chase in the middle and they get caught. And I'm going to show you guys that. That's why people like me, we wait on these edges that I'm going to point out. Why is that? So it's because we want the best risk to reward when it comes to trading. We don't want to trade fear. We want a high probability setup. We want to make money when it comes to trading, right? We want to make money trading. So we want to simplify things, all right? So one of the things that I want you guys to think about is this gray line, the 21. Okay, all right, and I like to take trades above it for high probability setups and below it for high probability setups. But one thing that matters, though, as you see this screen, is context and location. All right, location of the trade is what really matters. And before we get into that, now that you guys know where we're headed, I want to take a quick moment to hop over to the recap, because last week, all right, I gave you guys a video telling you about and I'm sorry, this was almost a month ago, a couple of weeks ago, when I gave you the January trade signal. That price guidance, it comes up to where we are right now, so they go together. And I want you to see why price did what it did here. All right, so we're going to check out this quick clip, and we're going to come right back to finish this trading plan. I appreciate you guys watching thus far. So bear with me as I navigate this screen, and we're going to be right on that video in just a moment. We have, as you can see, is a little bit of momentum towards the upside. All right, and so this bond yield ETF is saying that we can have some sort of relief rally on SPY. All right, now time frame continuity. Time frame continuity is really important. If you never heard it, let me explain it as you watch the screen. A lot of traders get stuck here. They look at one time frame, like for instance here we have the daily. They look at the one time frame and they ignore the rest. But markets are layered. The monthly gives you your bias, the weekly gives you your structure, the daily gives you your context, and the intraday gives you your entries. I said again, The monthly gives you your bias. The weekly gives you your structure. The daily gives you your context, and the intraday gives you your entries. And so if we're starting on the monthly, just with that said, all right, we go to the monthly time frame. Here's the monthly time frame, all right? Where's our bias? All right, where's our bias? We got our... All right, this is the part I want you to pay attention, okay? Pay attention. This is a recap for my January trading signal, the market's next 30 days. And we are in the 20th of this monthly cycle. All right, so this is the important part. Pay attention, and we're going to get right back to the charts to give you guys this trading plan. Stick around. Our layers, our traffic light, we got our demand, where price started from, where it rejected from, the midway point, right? Found some support here at the green line. This is our bias, and where's price relative to that? We already seen that, okay? The weekly gives you your structure. Let's go to the weekly as we're talking about it. All right, the weekly, okay, that's your structure. Are we breaking structure? It seems like we are breaking below 681.82. All right, we did close at 681.92. All right, 681.82. All right, if we break that, we can see continuation towards the downside. Now I'm going to stop that video right there, okay? And now we're going to go over to the charts so you guys can clearly see what happened. All right, so right here is we have this expansion, okay? You see that we have these breakout pullback zones, okay? All right, why is that? Because right here, all right, this was around the time I did the video, okay? That video was right around this time. You can see the proof down here on the bottom. You see the gray area that tells you right here. This area here is going to pop up with a date as I hover over the candle. And you can see here that January 2nd, January 1st, all right, this was my signal, okay? We got above the 21, our trading signal for high probability trades, all right? And we took off since then. Now, this is the breakout point. Price broke out from my area, took some days, some weeks, and we finally came back here. So that's why it's the breakout pullback zone. We pulled back to the same zone we broke out from. Now that number that you just seen, 681, all right? Now I said that we could see some downside if we broke below that number, all right? And what do we have? If you look here, 681 was around here. We broke below it and we continue to flush towards the downside, and we went all the way down to 676. Okay, that was the signal. Okay, it broke below. I gave out that plan. All right, that was a $4 to $5 move, all right, inside of this pendulum swing. Okay, because if you notice my screen, you see these red lines going up, these vertical lines, all right, that represents what we call a megaphone, okay? And ranges act like magnets, and you have price that swings back and forth inside of these pendulums, okay? These here ranges, these zones are pendulum swings, guys, okay? And prices move back and forth in this middle of a range. The point of control is right in the middle, and that's where we are right now. Price bounced right from the closing price of the December monthly closing. You see how we bounced there? All right, we broke it, and then once we got back above it, price took off. Okay, so 681.92, that's your previous monthly close. That was on December 2025, right? And then we had January open, which was 685.71. Now, if closing price acts as demand and we see volume in the sector, the gamma explodes from there to retest the highs. Patience is key. The word gamma, it really means fuel. There's more people buying certain numbers on this chart. The more people, the more gamma you have. That's what that means. Now, you can't see the gamma data, but if you want to know that data, just click that link below. Check out the description below, and you'll see the Discord that we have. It's called the Unique Trading Group, and we have a community for those who want to learn, that takes trading serious. Join that community. All right, sign up and get a free ebook that I created for the trading community. All right, that link is below. Now, back to the lesson at hand. Now, you want to see closing price, right? The closing price is 689.23. 689.23 is the previous close for Friday. Our signal for bearish or bullish flow, all right? It will act as resistance or demand, all right? Wait for the closing price on the time frame you choose to enter into your trade. Now, let's backtrack for a second. Why do I say it's a bearish or bullish signal? Because if price opens up on Monday, 689.23, and we open up above it, which is the previous closing price, it's going to be a bullish continuation towards the upside, right? Now, just like we have a breakout pullback, if we have a breakout from that price, 689.23, you want to wait for a price to pull back to that number to retest to see if it can hold as demand. Are you guys with me? I hope you're with me. You got to understand that. Now, where are we right now in the nick of time? Well, I tell you, we are actually in a moment where we're pretty neutral here. We have a fear and greed index that's sitting right here in neutral. All right, we're at 52. All right, it's fair game. We're right in the middle. All right, and it adds up to what we see on the chart. Now, I've seen some data. All right, what the banks are doing. The COT report says that we are seeing some banks buy. Okay, and you want to be aware of this. All right, the COT says that the commercials, the banks, the smart money, they're buying right now when retailers and spectators are shorting the market, and this fuels the market towards the upside. Remember that I said that, and I'm going to show you that on a chart. Okay, that's what's going on. All right, it's really game on and it's risk on, and we have a couple of key catalysts coming up. We have earnings season that's here. All right, Donald Trump, his tweets, the tariff talk, anything could go. And we have a lot of volatility, which creates a lot of pendulum swings. All right. And so what I'm giving you guys is a strategy. All right. The strategy is going to meet mindset, and that discipline is going to turn into income. Now, why is that? Where are we right now? All right. We just known and we just seen, and now that you know, the fear and greed index is right in a neutral moment. Right. The banks are buying. All right. Okay. And we are above the 21. We're right here in the range of emotion, right here at the point of control. And the point of control means if we're above the point of control or above the 21 EMA, within this range, this pendulum swing, we can see some upside continuation if we stay above the 21 and stay above the previous close of 689.23. Okay, we can see this range expand the same way you've seen it go up here. All right, back and forth, come all the way back down here. We caught those traders who are trapped, who shorted the market, right? They thought that we was going to continue towards the downside, all right, because they seen that gap over here, but we didn't do that, did we? No, we gathered those orders, scooped up that liquidity, and now we're making our way back to possibly swing towards the upside here, okay? So I am looking for these highs to be retested, but only on a signal. We are on the 1 hour time frame. I am executing this trade on the 1 hour time frame. You want to see price hold above the 21 SMA, all right, the simple moving average, right, which is sitting around 688. The bottom of that range is 685 and 686. Now, I want to warn you, even if 689 fails, and let's say it fails and we get below 687, all right, you don't want to just assume we're going to fall all the way back down here. You want to wait for 685 to hold. Why? Because, guys, we're dealing with thirds and three, all right? So if 690 is a wall and 680 is that floor in the $10 range, 685 is the midway point, all right? Always think about the range of emotion in the middle of anything, in the middle of a candle, in the middle of a big range. Always think about that, all right? The risk to reward. Now, if you were on this chart and you wanted to buy calls, where would the best risk to reward be? Let's think about that. Take a moment to think about that. All right. The best risk to reward for calls in this whole swing will be right here. All right. When we call the bottom, and right here in this whole swing. Not right here. Not up here where people chase calls and we pull back. Right. Not up here where they chase calls and we pull back. Okay. Not even right here. All right. Now, there are people who are long in the market and they bought last week. But if you're not, if you're trading, your first time watching, or you're looking for the signal, this trading signal right here is what I'm telling you is going to work. So screenshot this thing and understand that we're waiting for momentum and volume and price to stay above the 21 and for it to stay above that previous close of 689.23. If we fail and the negative market shows negative volume, a lot of volume towards the downside, and the bears show up, we're going to flush towards back to these sides to test these bottoms and these demand levels, these breakout zones. All right. And so just be mindful of that. OK, now what you want to see is, let's remove this here. All right. We're going to try to remove this. OK. Now, next week, you want to see this move here. OK. Let's say we come up here, price moves up, hits that range here, right? And we pull back right here in the range of emotion. This would be technically a breakout pullback zone, just like here, but a smaller one, right? And we catch some folks chasing right here, all right, to catch that higher low. Here's your higher low right there. You want to catch that, right? Right when the 21 curls and it comes in and saves it, right? It comes in and saves it. You want to buy that, create that head and shoulders here to go back towards the upside. That's a technical setup. That's where you want to try to get your buy at, okay? If we now let's do the opposite side. I want you guys to get this. Okay. All right, let's take that back off. Now let's say this happens. Let's say price breaks and you don't chase and it pulls back to where it broke from. All right. This is your entry for you to take calls back down here. That's your entry. This is your entry. Okay. Are you guys with me? All right. You want to let price and the range dictate where you're buying and selling from. And so if you can see structure doesn't lie. Okay. And so if you need to rewind the video or check it out, that's what you guys need to do. All right. So understand this. Price above the 21 moving average, which is our gray line here. All right. Above the 21 moving average. That's where buyers have control. Cool. All right. We're only thinking long. All right. Price below it, sellers have control. We're patient. No fighting the flow. Then we layer with the Bollinger Bands, okay? So you see everything we have. You got my notes. You see the pendulum swings, how price can move back and forth. Now let's take everything off of the screen, okay? Let's take everything off of the screen. We're going to clear the screen. Now there's nothing here, and it's all bare. All right? Now, when you see this here, you see that price is consolidating. It's ranging, all right? All right, right now, energy is building. All right, and this reminds me of what they call a bear flag. A bear flag could possibly turn into a measured move. All right, you see this leg up? This is the range. That's what you have here. Leg up, V bottom reversal. This is a V bottom reversal that you see. All right, the second half of that is the flag with the pole. But when price breaks out of this range here, you want to see price go up towards the upside. And it typically mimics this same leg towards the upside. All right, and we are above the 21, so the probability of that happening is likely high. All right, so that's the move. So we're not going to jump in early. We're just waiting for expansion and confirmation of a closing price. All right, a strong engulfing candle. So once you see price, all right, let's be clear about this. Once you see price engulf this candle here, that red candle beside the current candle, all right, once this candle breaches price and hits and knocks out that high, price gets above that high, which was 689.86, you're going to start to see some momentum towards the upside, taking out those orders. All right, that's what you're looking for. All right, for price to do this, I want to give you guys visuals. Hope you've been liking the video thus far. I know it's been an impactful one and a rather long one, but this is what it's going to take. You guys are studying and doing outside of the norm what other folks are not doing right now, so that you'll be ahead. All right, you want to see that. All right, a candle breaches over the next one. All right, knocks out that one. That's all we're looking for, okay? All right, so let's take that off. All right, now that you guys understand that, as a matter of fact, we can keep that there. We're going to keep that there for a reason. Now, the commitment, the real commitment now, that's our entry, all right? Our risk is at 1 bar stop below here, all right? 1 bar stop. If you take that trade, put your stop below here and below the 21, right? Because remember, below the 21 is where we take short trades to trade towards the downside. Makes sense? Don't trade with fear, all right? We're going to thinking about risk, all right, because small losses are business expense. All right, it's the cost of trading, and you want to stay in the game. You don't want to blow your account, newbies. Pay attention. That's a big difference. Now, this is where mindset separates people. Amateurs think this. They think, I hope it works, right? Professionals think, if I'm wrong, I lose this much. If I'm right, I make 3 times that. That's it. Risk to reward, guys. You don't need to even win every trade. You just need the math on your side. That's trading, not prediction, but getting in position for a high probability trade. All right. Now, I always tell my students, it's like the Matrix. Most people see the candles, but we see the code. We're reading the behavior. All this chart is human behavior, guys. It is human behavior right in front of you. You can use different metrics to see that. Your entries, just like right here, you can see an entry here. A simple line break and a burst of energy right there. As soon as price gets above, you can use the bullish engulfing or the breaking of that structure. Market structure. Structure is breaking and we're taking a trade to the upside. Now, if you get into that trade, as price moves up, you want to lock in profit. All right. All right. You want to lock in profit. Remember, you put your stop, right? Remember, you got stop. You put it here, the 1 bar stop below here. Right? Remember, that's your stop. We're going to make it red for those who like, hey guys, you know, coach, the stop is red, all right? So you make that red, right? Now you get into the trade when it bursts over here, right? Think about it, all right? Price gets above here. Got your candle that closed, all right? And then you move your stop up, all right? You move your stop up to where it broke out from to lock in that profit. No matter what happens, you're locking it in, okay? And as it continues to move up even more, right, to retest these highs, got another candle, right? Got another candle, and then you take your stop, right? You move up your stop. Boom, now you locked in that profit. So no matter what the market does, if it wants to flush, right? Oh, doo-doo, right, da-da, right? Just like right here. We had a flush here, came back, fell, had this overnight. Trump tweeted about tariffs. All right, you're not worried about that because you're already in the money. And that's the way you got to think about things.